So welcome to yet another OpenChain webinar. This is around our 100th webinar. And this time we're talking about the future, and it's a topic which I think will become surprisingly important. We're talking about insurance and open source. Many people over the years have touched on insurance, but very few have gone into how this impacts open source in depth. Now, with a changing regulatory environment and a changing legal environment, it is more than timely to discuss this again. And we are going to discuss it with some genuine experts. Most of all, I must welcome back Lewis from Lockton, who works in the insurance industry and is therefore deeply embedded in how all of that mysterious stuff works. And on the open source side, we've got Andrew from Workrow, who not only knows open source inside and out, but also is a lawyerly person and therefore can do lawyerly things when talking about the topic. We therefore have excellent presenters to run us through this topic, and we have a solid audience online who can raise questions as we go. This is being recorded, and we will be releasing the recording on our YouTube channel, on our website, social media, and so on. It'll be a long tail in the watchers of this, and if you're watching the recording a few months from now, or even a few years from now, you can still ask questions. Go and contact us in the OpenChain project, and we'll make sure to reach out to Andrew and Lewis. Right, without further ado, over to you, Lewis and Andrew. Tell us about the future of insurance for open source.
Excellent. Thank you very much, Shane, and welcome everyone. Right, so you'll have seen the antitrust policy notice, which is presented traditionally at all of these webinars. So if Shane needs to leap in and say anything about it, then I will let him do so now. This is a brief introduction for two of us. Shane has also done sort of fantastic intro, so I'm not going to repeat this. There's also our contact details on the bottom of this slide if you do want to reach out to us directly as well. But obviously questions of general interest, if you run them through the OpenChain project, that would be great. We're both solicitors, so necessarily there will be a disclaimer, and we are lawyers, but we're not your lawyers. So this is really information of general interest and is not specifically aimed at your circumstances. Right. So what we're going to do is we're actually going to introduce the concepts of insurance and how risk is handled from a sort of fairly basic level, because I think it's something that should be quite helpful to put everything into context. And the way that I always start when I'm talking about handling risk is really to think about the three main ways in which you can deal with risk. And before I do that, it's probably worth thinking that risk in many ways is actually the flip side of trust. So OpenChain project itself is all about trust. It's all about generating trust in the supply chain. If you have a high level of trust when you're dealing with someone, that's because you perceive that there is a low level of risk. So risk and trust are really two sides of the same coin. If we're talking about minimizing risk, we're talking about maximizing trust. So how does that work? Well, the primary and most important way of dealing with risk is to assess it and then to manage it through process, practice, and procedure. And this is exactly what the OpenChain project is all about. It's all about looking at an organization's processes, its practices, and the procedures that it implements in order to manage and minimize that risk. Now, as a lawyer, the way that we will typically deal with risk is to pass that risk onto a purchaser or a supplier through contractual terms. And this is what a lot of contractual negotiation is about. This is where we're going to be talking about warranties and indemnities. So in that case, we're accepting that there's a degree of risk, but what we're going to do is we're going to try and pass the obligation for handling that risk or compensating for if something goes wrong, to the other party through contractual terms. And then the third way of handling risk is related to the second way. It means that you can pass risk on, but you can pass it on to a third party. And of course, if you're essentially outsourcing your risk to somebody else, then we are talking about insurance. So it's just important to bear that in mind for the rest of the conversation. Of course, there's another two ways to handle risk. I mean, one of this, just don't do anything at all that you feel is risky, but that way there is no opportunity to do anything. And the final way, which probably happens much more often than it should, is just not to think about risk at all and just do it and really don't care what the consequences are going to be. So bearing that in mind, then Lewis is going to explain a little bit more about how insurance and the industry operates. So Lewis, over to you.
Thanks, Andrew. Yeah, we thought it might be best to do a bit of a back to basics introduction, just to set the scene a little bit for some of the more detailed discussion we have about specific products in the market that might address open source risks. So starting back with why do people buy insurance? And there are many different reasons why. Sometimes it can be mandatory, so there might be a positive obligation on someone to actually buy insurance. So you can think about this in your everyday life. You might have to have car insurance, or certain businesses might have to have professional negligence insurance. So lawyers, obviously, and doctors, etc., have to have insurance in place to practice. As Andrew just mentioned before, there might be a contractual requirement between two parties or two or more parties, and it might be that one party requires another to indemnify the other for breaches of reps or warranties, or it might just be separate indemnity obligations. And sometimes those parties might require that those obligations are backstopped by insurance. Separately, and it's a concept which gets used a lot in insurance, and it's this idea of comfort, which might be slightly an odd word to throw into the mix, but that is generally what insurance is partly aiming to do in a commercial context, and that might be to give a counterparty sufficient comfort and confidence in a business if they've got a comprehensive insurance in place. And really what that's doing is it's showing that an objective independent third party has assessed the business and has agreed to provide an insurance product. So it kind of suggests that the business has been through some sort of due diligence exercise. But there's also a separate reason, which this is especially where you have insurances that aren't mandatory, aren't required by a counterparty, and that's where there's perceived level of risk, and that might be where there's a developing problem in industry. So, obviously one of the areas which is becoming common to insure is malicious cyber attacks, and certain industries are more vulnerable than others. So boards might be more driven towards ensuring those risks, or there might be other kind of industry-wide problems that people are thinking about and feel the need to have some sort of insurance in place to protect the balance sheet. The insurance supply chain is it's not the most complicated thing in the world, but it is important to understand how you get from a policyholder to the actual insurance product, and then what happens with that insurance product behind the scenes. So one of the main sort of players in the supply chain is an insurance broker. So that's currently my role, although I have worked from sort of the in-house counsel, claims counsel, underwriter role, and broker. So I've seen a fair amount of how the supply chain operates. And the insurance broker's job is to assess the particular problem, find solutions, negotiate the insurance products on behalf of the policyholder, and separately also then assist with claims handling. So should something go wrong and there is a claim. And insurance brokers will interact with the insurance market, which is made up of different types of insurance companies. We don't need to go into too much detail on this, but broadly speaking, you have insurance companies that have their own insurance capacity, and then you have what otherwise you might refer to as MGAs, which are managing general agents. And what they do is they syndicate third-party capacity, and they have basically the right to bind insurance policies on behalf of that capacity. And then separately, you might have heard of, very familiar with Lloyd's, which is probably the world's most established insurance market, and within that you have Lloyd's managing agents, which separately provides insurance. But the book doesn't really just stop with those insurance companies. This is sort of a broader conversation on sharing risk, and whilst the underwriters might take on some of that risk from a policyholder, they then share that risk with reinsurers. So you have this concept of ceding risk. So those insurance companies will actually reinsure their own risk, and they won't do that once. Reinsurers will then reinsure their risk. So you can end up in this almost endless chain of reinsurance. And it's important to mention that because where there is systemic risks, which reinsurers become nervous about, they can then push back against what the underwriters, so these are the people in the green boxes, can take on and can underwrite. So it's important to kind of understand what their role is. So how do insurers assess risk? Well, the first thing to point out, which is really important and will become a theme throughout this presentation, is that insurance contracts are a bit of a strange beast. They don't work like other commercial contracts, and that's because they're based on the concept of utmost good faith. And in reality, what that means is that there is a positive duty on a policyholder to disclose facts and circumstances which might affect an underwriter's decision to take on risk and on what terms. So the idea of caveat emptor, so buyer beware, does not apply in insurance. And to try and help policyholders disclose properly, insurers use standard proposal forms, but this, as we'll see later, can become problematic where you have quite complex risks. So, for example, if we're talking about a software development business, a single tick box proposal form probably won't capture all the risk that needs to be communicated. And what this does is it puts pressure on brokers and the policyholders to present those risks clearly so that the insurance policy does work and respond as it should. And if we take just an everyday example of car insurance, which I'm sure most people will be familiar with, the insurer will want to know about you as the driver. Have you had any claims in the past? And also, what is your car? Because that will impact the terms of the insurance. So if you say you drive a standard Toyota Prius, there might be one premium, or there might be certain terms attached. But actually, if you've not been completely truthful, and actually you've heavily modified that car, and there's a claim, the insurer might seek to avoid that claim or use some other remedy. So the importance of you disclosing accurately and clearly is really important when looking at insurance. But insurers don't just rely on information provided by a policyholder. They have a wealth of data at their fingertips. So one of them will be claims history in an industry. Other will be claims history that's presented by potential policyholders. So if there's been any litigation, for example, or data breaches, etc., or vulnerabilities that have been exposed, there's a duty to disclose those, and that will form part of the underwriting. As I said previously, there might be systemic or industry-wide risks which are well known about, and underwriters might take those into account. One thing which is going to be very important in our discussion are the changes in law which are impacting all software sort of developers, distributors, and other parties in the supply chain. Some insurers may also use third-party databases. So I focus on intellectual property risk, for example. So we use kind of all the main proprietary tools which help you understand risk in various IP landscapes. Or there might be very specific factors which make a policyholder's business more or less risky. And that's not a definitive list. These are just some examples of where insurers can look to other points of information to make their decisions. So bringing this a bit more focused on open source software businesses, and I've said open source software in brackets in my slide because we might just be looking at various businesses where open source is used, but it's not the core, one of the core kind of foundations of the business. And we put some heads of risk here, and that's not all of them. There'll obviously be many more, but we want to focus down on some of the select and more potentially severe ones. So, for example, there might be security vulnerabilities, which might lead to vulnerabilities in the system, allowing or enabling third parties to maliciously access the system and all underlying data and cause problems. There's obviously a whole kind of complex realm of intellectual property risk, which software businesses might face. So that might be open source compliance, which we can talk about later. Software businesses can face patent infringement claims to the extent that you've got in-house developers or third-party contractors developing elements of proprietary code. There's usually always some form of gaps in chain of title in copyright, which can become an issue. And then depending on what the software is, there's obviously all kinds of copyright design issues around graphical user interfaces and so on. You also have customer contracts, which if you're supplying software or distributing software to a third party, there'll be a standard set of warranties or reps and warranties, which might be breached by, depending on what those look like. There might also be indemnities given to those third parties, and they might cover things like intellectual property risk, etc. So there's a risk of those contracts being breached, those indemnities being triggered. I'll skip the order here and go straight to regulatory. There are an increasing set of laws and regulations which will govern how software businesses can operate, and this potentially is going to impact the sort of the business universe of transacting software quite heavily. And then lastly, for now, there's the M&A process, so mergers and acquisitions, and there are a whole suite of reps and warranties that are given in these processes, which will talk to all kinds of topics, including open source, IP, etc. And this can be an area where an acquirer can take on not just a business, but also its risks, and that can leave problems for the sellers as well. So, Andrew, over to you. Has there or is there a dedicated open insurance product that you've become aware of on the market?
Cool.
No, well, I was going to sort of give a little sort of bit of sort of context in terms of my involvement in open source and insurance, because I mean this is something that I've been discussing with various people for sort of well over 15 years. And in fact, I was actually involved in the launch of a product from a major insurer back in 2011. This was basically a supply chain product. So it enabled the insured to be able to sell products to their customers, which had incorporated open source software code, and then put some terms in the contract with the customer, which gave various warranties around the IP that was contained within that open source code, and then that was backed off to the insurance. And this was at the time it was a sort of fairly new product, because even though open source related products had been available previously, in order to access them, you basically have to go to a very sort of specialist insurer. They would be typically sort of asking from at that stage from sort of 10 to 20,000, whether it's pounds, dollars, euros, whatever, to actually undertake the risk analysis that would enable you to get a quote in the first place. So this wasn't the premium, this was the fee to enable you to actually get a quotation for the insurance. So, huge barrier to entry in the marketplace. And this particular product streamlined that process, basically by requiring anyone who wanted to take out the product to be able to, as part of the proposal, to go through a sort of tick box exercise. Again, anyone that's taken out sort of home insurance, car insurance, whatever, will be very, very familiar with this process, and be able to provide some information. And obviously they would have to stand behind that information. Lewis has talked about the sort of duty of utmost good faith. But that was information about the practices and procedures that they had internally to be able to manage their own open source IP liability risks. And actually, if you go back to that product and you look at the questions that were being asked, it is not entirely coincidental that those questions are very similar to a set of questions that would be driven by the OpenChain specification for license compliance today. So this has been a sort of consistent thread. Frustrating thing, if those of you who are sufficient industry veterans may well remember that around 2011, 2012, there was a bit of a patent apocalypse that was going on between lots of providers in the comms world who were suing each other for alleged patent infringement. And that meant that this particular area of insurance was perceived to be a sort of fairly dangerous place to be. It was a little frustrating because, from my perspective, the product was the part that I developed was based purely on copyright infringement. But nonetheless, the insurers sort of withdrew from that. To my knowledge, there hasn't really been a lot going on in the world of insurance and open source since then. And this is really now that interest has sort of been rekindled.
Shane, were you about to ask a question before?
Yes, I did have a question when it relates actually to the patent matter that you had just touched on earlier and then Andrew brought up. This goes back to other areas of insurance because patents seem like a very obvious risk area for open source, but obviously something of immense scale. It does seem that when it comes to the cost of insurance, unless the party who's providing the software is entirely willing to take the burden of that potential cost themselves, if a third party like an insurer steps in, it's likely the insurer would have to ask for quite a lot on the policy given the potential risk. Now, this is speculation, but it could be expensive, or it may have perceived to have been very expensive in the past, say 2011, to cover the risk of patent issues. Though I imagine, and this is my question, I imagine that patent issues are not at all foreign to insurance agents, and a company which has been providing insurance for half a century or more, such as Blockton, probably has had to address these topics. And I just wanted to ask, has the question of software and patents appeared elsewhere on your radar in the insurance field? Is it something that you've addressed? Was it perhaps disappointing on several levels that the market pulled back in 2011, 2012 on open source and this topic?
So yeah, this does come up quite frequently. Factoring in that I focus on intellectual property risk, obviously my viewpoint is slightly skewed on this, but it's an important point that Andrew raises about, I guess, the risk perceived being, well, initially focused on the copyright and open source license compliance, and sort of the patent risk became the reason that actually killed the product. And there is a risk in the insurance industry that once solutions come to the market, it's only really when the claim scenarios come to the fore that actually that's the real test of the product. So you can have this risk of insurers pulling back, and that's a problem because if you rely on that insurance as a transactional enabler, and it's suddenly not there, or it's not there on good terms, then that can cause obviously problems in sort of contracting. So this is an issue which Andrew and I have been talking about when we're thinking about what products does the insurance industry need to look at. One of the key things is sustainability. But on the patent front, there are a number of specialist insurers that insure this risk, and one of the drivers is non-practicing entity or patent troll claims in the US. And so we do see a lot of clients, and these aren't necessarily technology companies. These might be retailers or banks, etc., that are using third-party in-licensed technology, and they are a common target for non-practicing entities that are bringing sort of patent infringement claims against software that's used. And the insurance industry has been insuring that risk for some time. It used to be really quite expensive and difficult to obtain, but actually in the past couple of years, because the market's become more competitive, it's actually the pricing has come down quite considerably, and it's a much more straightforward process. There are some reasons behind that which are to do with how patents have been litigated around software in the past 10 years in the US, but generally that's market forces at play in the insurance industry, and that's a common theme with where products become cheaper and usable, and that's because more capital enters the insurance market and there's a pressure to be competitive.
And I suppose, Lewis, this touches on something which you both mentioned, that this field has been running a while, and Lewis, you covered quite a lot of ground setting the tone for the insurance industry. I just wanted to add something in case some people on the line are very new to the scale of this. So Lewis referred to Lloyd's in London as being an unusual thing. And of course it is, because Lloyd's is an insurance market and it brings together various insurance providers. And it's been going a very long time. It's been going since 1689, started in a coffee house. So, when it comes to managing risk, the industry's been there for a bit. And it's heartening to hear that, topics like patents, are commonly addressed in areas like insurance, that there are specialists who do it. It's also heartening to hear that essentially, because of more people entering the insurance market to support this, the prices are being, by natural economics, depressed, which is good news for all.
Yep,
Lewis,
sorry, Andrew, go on.
Sorry, just want to step in there. Just wondering if it's fair to say that one of the factors is that also the software industry itself, particularly the sort of those in the software industry who are dealing with open source software, have actually been addressing the question of patent risk much more effectively themselves through initiatives like the Open Invention Network and Lot Network and so on.
I think that's right, Andrew and Shane. One of the things which we always discuss with clients when they're looking at focus on patent insurance at this point is do they have any membership to any third-party bodies like OIN and LOT? And that can be an important factor in driving the underwriting decision-making process. So it might be that the product is more easily available to someone that's part of these membership bodies and has been seen to actively manage risk, rather than someone that's just had a claim and is sort of in a tailspin and quickly wants to put in place some insurance without any practices, policies, or any other thought around it. So, and that's a common theme which we'll touch on later is that preparedness and having an in-house set of policies and procedures which help you contextualize your own risk so that an insurer has an easier job of understanding what your position is. And what Andrew and I did prior to this presentation was that we actually did quite an analog and old-fashioned thing, which was to walk around the Lloyd's market speaking to underwriters and ask a number of questions around what policies that they have that ensure open source or software risks generally, and what their understanding was as open source. And we had some really quite interesting and different responses. And on this slide, what I wanted to really showcase here was that there isn't really one open source relevant insurance product. There are a complete plethora of different products which might touch upon different risks. And the challenging thing, as we'll get to, is having to layer these different products together to actually get you the protection that might be needed. And this is something where we think the industry, both insurance industry and open source community, might need to cooperate on, because as you'll see, some of the products might appear that they might cover issues that you're concerned about, but actually they might not cover them in the way that you think, or you might need to pair different products together to achieve the right result. And this can be really confusing for a client, but also, as we'll see, we're not so sure that the insurance industry really understands sort of the software development process and the risks therein. So, Andrew, I was really interested in your take on those discussions with underwriters as a bit of an outsider to insurance.
Yeah, I found it absolutely fascinating, I mean, obviously, people with a great deal of expertise, and they understand the market, they understand their own market, they understand their own products, etc. And they actually asked us some very searching questions as well, which was great. So it's very much a sort of two-way flow of information. Not a criticism of them at all, but they really don't quite understand open source, and I think this is partially a sort of communications issue from our end, from the open source experts end, and this is something that we've been talking about in a wider context as well. Is that over the last few years, we've actually started to realize that it has been a lot of essentially geek on geek conversations, a lot of very techie people talking about techie stuff, and it's been a sort of a relatively small and enclosed world, and we know, or at least we believe we know what we're talking about, but we have to do a lot of outreach to other organizations to try to explain that. And this is something, obviously, the Linux Foundation and OpenChain in particular has been sort of doing some really good outreach on this as well. So that was one of the things that I found really interesting, was the level of understanding of what open source is, and what its impacts on the software development industry, and what the wider impacts on the commercial activities and the risk profiles in general. That is something that we're going to have to continue to do quite a lot of work in educating people, so they feel comfortable that they're able to assess the risks and therefore to underwrite them as well. But also the other thing that you highlighted was that we are essentially bringing together all of these disparate types of risk, and it's not as simple as being able to say, well, that's an IP risk, or that's a cyber risk. And it can be challenging for some insurers, and it depends a lot on how the insurers are structured internally, as to whether it means that, to put a package product together, they will have to deal with a number of different internal divisions and get them sort of communicating with each other. And clearly, some insurers will find that easier than other insurers. But yeah, so that was my impression. I mean, there's a willingness to do business, definitely, because they can see that there are risks out there that they can usefully address, and there is a market for them. But it's going to require quite a dialogue between people on the insurance side to understand the products and understand how to assess the risk, and then people on the open source side who can provide them with the information that they need in terms of the way the market operates, but also the way that those risks can be assessed in the first place.
Yeah, I thought your take was really interesting, and I think what the conclusion of our presentation is, and of our exercise, is that we've got probably more questions than answers at this stage, and that's not a bad place to be. But we've sort of realised the work that needs to be done to bridge the gap in understanding, which is a core theme of this discussion. And like you say, it's not a criticism of the insurance industry per se. It's obviously quite a complicated topic, and if you're not immersed in it, you can easily see why over a number of years of changing industry practice, how the insurance industry might have not really kept up with what's going on. And one thing which stood out to me when we did a review of some of the insurance products on the market, bearing in mind that I specialize in mergers and acquisitions and IP, not some of these other products that are listed here. Just want to set that out. If I get anyone shouting at me who's a cyber specialist, this is not my area. But I couldn't find a single policy, an off-the-shelf policy, that actually defined or referenced open source software. And I think that's somewhat telling of where the insurance industry is at. There are plenty of other sort of technical terms referenced, but nothing to do with open source. So this bit might be somewhat a bit dry, but I thought it might be helpful to just go through a selection of the different types of products that are out there and what they do and what the shortfalls are and what kind of challenges that might leave for someone that needs to have an insurance product in place for one of the reasons we mentioned before, whether it's legal requirement or there's a contractual requirement, etc. And then where that leaves us with some conclusions on what needs to happen next between the insurance industry and open source community. So I thought the best place to start is one type of product, which is actually a combined sort of modular type of product, which might be called sort of a combined technology E&O, which stands for errors and omissions, basically negligence or breach of contract, and cyber insurance. These things can be sort of parceled off separately, but generally speaking, these days, this is one kind of modular product which covers a number of different problems. So one of the key areas that this type of product covers is loss arising out of the driver of looking at it is malicious sort of cyber attacks, and usually what's accompanying that is a potential loss or misuse of personal data or data breaches, and the coverage there is really covering the loss arising out of those data breaches or malicious attacks. You also have what you call, as I mentioned before, E&O, or errors and omissions, and that's, in the most straightforward sense, is covering breach of contract claims with a customer. It might be sort of warranties and indemnities talking to the actual products themselves. So whether that's fitness for purpose, or how it will perform, for example, or it might obviously be IP, intellectual property warranties, etc., contained in there. And if that agreement's breached, then potentially you can have those breaches covered under insurance policy. But it also might be sort of professional negligence, which comes up. So if there's more of a service element to what the business is doing, so it covers both of those things. And where this might become relevant is that if there are core software product defects that are inherent in what's being supplied or developed, it can cover off some of those risks. You sometimes have a sliver of IP infringement cover. It depends on the provider. Some policies only cover infringement allegations where they arise out of media output. So this might be like what's put out on social media and websites, etc. Not particularly relevant for this audience, but some policies extend that to infringement of third-party IP generally. So copyright, for example. So if we're talking about sort of title to IP, software code, and potential copyright infringement allegations in connection with open source, but they generally exclude patent and trade secret claims. So coming back to Shane's question before, the providers of this type of insurance, they used to provide some element of patent infringement cover, but they got basically far too high a frequency of claims and they couldn't underwrite the risk, so they now exclude it out of those policies. So you kind of got a core gap there. And generally that policy in the round is covering legal or other expert costs and expenses. So if it's been a data breach, you might need to get forensics involved. You might need to undertake notifications under sort of GDPR, etc., to notify potential parties of their data has been breached, and other costs and expenses. It also will cover damages or settlement amounts if it's in connection with litigation. There's also potentially cover for what's called business interruption, and that might be where there's been a direct loss of profits as a result of, for instance, a cyber attack. So that's in general what it's intended to cover, but it's important to note what the carve-outs are, so what it doesn't do. So this type of product, and if we're thinking about IP as being a core issue in software businesses, it doesn't cover title or ownership IP disputes. So you have to look elsewhere for that. Separately, these types of products generally are there to cover the actual policy holder for cyber risk, so malicious attacks and vulnerabilities. It's not intended to cover all that party's customers, so could be a potential gap there. Those customers might have to have their own separate insurance policies in place based on the way the market currently works. As we mentioned, patent infringement risk is a core area to think about in software businesses generally, and that's not covered. And you also have an exclusion for consequential loss. So that's if there's been one of those events we mentioned before, and that results in loss of opportunity, etc. That's generally not insured. And one of the areas which catches people out, and coming back to the points we made at the start, are matters known or ought to be known prior to inception of the policy. So go back to what I said before about there's a duty to disclose information about the business to an insurer. So if something's not fully disclosed and it becomes a claim later, that thing might actually be either excluded or at the worst case, which is quite rare for insurer to do this, but the insurer can void the policy. Um, so it's important to understand that there are some things which might be known to the C-suite, but might not have, no one's really thought, should that be something that should be disclosed to an insurer? And that thing might actually become a loss later, which is not insured. Another thing which might be quite important for software developers or distributors, where it's an integration with hardware, is that if there's a defect in the software which causes some sort of issue with hardware, there's no coverage for any tangible sort of damage to tangible goods or bodily harm. So if there's open source software being distributed into vehicles or for example into factories, etc. If that software causes sort of physical damage or other harm, then that's generally not insured under these policies. So these are quite a complex set of policies as they are, but as you can see, generally speaking, you've got to be quite careful about what you're seeking to get covered and making sure it doesn't fall between the gaps. Another type of product, and we just mentioned this before, is intellectual property insurance. So this is as you might imagine, a very specialist product, and there are maybe 5 or 6 specialist insurers on the market that focus on this. And the main purpose of this product is to cover allegations of IP infringement, including patent infringement and trade secret misappropriation. And that's to cover all types of IP infringement allegations. And it also covers things which might be relevant in software development, which will be, like I mentioned before, you always have gaps in chain of title, so it will cover ownership types of disputes. For businesses that also have registered IP, so whether that's patents, trademarks, design rights, etc., it can also cover the costs where those rights are challenged, either in validation actions or like post-grant reviews, etc. There might also be the case that some policies, unlike the other ones we just mentioned before, can cover mitigation costs. So if there's been an allegation of infringement and there's a way of designing around a problem that avoids that infringement, then there might be some mitigation costs for those or developers or whoever it is that's needed to do that work. And potentially quite crucially in the software supply chain, that cover can be extended to include indemnities provided to customers, so that if a policyholder has to indemnify a customer for infringement claims made against them arising out of their supplied technology, then that can be insured. And it's generally covering costs and expenses and damages settlement amounts. But as always, there are carve-outs to these things as well, and this is where this gets a bit messy. So breach of contract claims are generally excluded, which is, I think, quite a strange position. It only covers indemnities. So one of the issues that we've been grappling with is where you've got a open source license non-compliance issue, which might not be brought as a pure copyright infringement claim. It might be brought as a breach of contract claim. Technically, that might not be covered under this policy. Then coming back to our previous point, facts known or ought to be known prior to inception. Now, how you define what ought to be known at inception for an IP risk can get really quite complicated. So if you have a business that's done some work assessing their own IP risk and looking at licenses they use, open source components they use and whether they complied, arguably all of that stuff has to be disclosed, which can be a bit of a challenge. And one thing which has come in recently, as you might imagine, is that insurers are quite nervous around generative AI related risks. So this might include where you've used Copilot or some other tool to help develop software code. So we're seeing insurers exclude that risk. So this might cause a bit of a problem at the minute for software distributors, developers that are using Gen AI as part of their development process. I won't going to touch too much on M&A insurances because I appreciate someone in the group will be doing a separate discussion on this in another seminar. But generally speaking, these days, a lot of mergers and acquisitions deals are insured. And what that means is that the share purchase agreement or the asset purchase agreement contains a whole suite of reps and warranties talking to the business that might cover open source IP, material contracts, compliance with laws, sort of security, etc. And instead of the seller being liable for breaches of those warranties, what happens now is that the risk is shifted to an insurer, and usually a buyer takes out this policy. So effectively, if there's a breach of the agreement, the policyholder or the buyer sues the insurer in effect, and not the sellers. So what's relevant here is that if you're buying a software business, in theoretically, that policy can cover inherent defects in that software, which become crystallized risk after completion. And that might cover a whole host of things, and it might include open source license non-compliance, other IP issues, and just other general issues which might come up in ordinary course. And usually, what that covers is loss arising out of the breach, which can either be in England, the English law would be diminution in value, or looking at more European continental and US concepts, it's more likely to be an indemnity basis of loss flowing from the breach. It also covers costs and expenses for defending against third-party claims. Of course, this is not so straightforward either. So forward-looking risks are not insured. So that if you understand anything about M&A and sort of how share purchase agreements work and warranties work, it's a snapshot in time. So the warranted statements will talk to how the business is looking at that date. So it's not covering where you've got a new release of software which might have new components or new IP included. That does not get covered. You have to get a separate insurance policy to deal with that. You also have this concept of seller's knowledge, which means that warranties might be qualified by something like, to the best of the knowledge of the seller, the target's intellectual products do not infringe third-party IP. And so basically the recourse for the buyer is really quite limited to what the seller knew and didn't disclose. And one of the key points is that due diligence is a gating item to get insurance. So if there's big gaps in DD due diligence, so if there's, for example, it's a software business and no open source due diligence has been conducted, it might be that there's a very broad exclusion put in. And as with the IP insurances, GenAI is becoming an area of focus by underwriters. And it's not necessarily that they have a deep understanding, it's just that they are seeing litigation left, right, and center, and therefore look to exclude the risk by default. And one thing which might be important from a trade buyer or corporate perspective is if you're buying a third-party software developer or distributor or whatever it is, you're likely to be looking at how to integrate that business into the wider group post-completion. And integration-related exposures are generally not insured under these products either. So again, you sort of have to think about how to package different products together that achieve the result. And the last one just to focus on for this session is identified risks. So everything we've just talked about so far, insurance products on the market and insurance generally, is there to ensure unknown risk. But there has been a growing trend of insurers insuring known risk. So in the open source context, that might be, for example, a piece of work that's been done and there's been identified use of open source components in non-compliance with the licenses, which might trigger certain liabilities and losses. And there might be a plan to remedy that, but it leaves that exposure on the table. And that might be in the M&A context. It might be under ordinary course. It might be a counterparty has requested some DD to be done before signing up to a license. And what you can do is ensure that known risk specifically. So it's obviously quite a narrow, hyper specialist, bespoke product that covers that identified problem. But that is a very specialized product, and it's not there to deal with risks generally. It's just to deal with those very specific identified risks. So where does that kind of leave us? Well, there's some kind of thoughts I want to throw out here, which is if you're looking at trying to use insurance as part of your business processes and risk mitigation, how comfortable can you be with using off-the-shelf products that don't define or reference open source? Do you need to speak with your insurance broker and underwriters in more detail to help them understand what your business does, so that everything is properly defined in the policy? Because at the end of the day, it's a contract and you need to be able to rely on the wording of that contract and to be clear. So I suppose finding a broker and an underwriter that understands open source and software development, I suggest probably quite important if you want to find something that's fit for purpose. Some of the things I think keep in mind are if you've taken out insurance policy and there's been a claim. So let's say, I don't know, a claim against a customer and there's an indemnity in the policy that covers that. Insurers generally want to subrogate once a claim's been paid. And what that means is that the insurer steps into the shoes of the policyholder. And if they can recover some losses, they might do. And that might mean suing a customer. So does that potentially impact your customer relationships, and how might you deal with that? Do you need to negotiate that with the insurer? And one of the things which comes up on the face of these policies, which if you have a look through some of my notes that I put before, is that they cover, or they state they cover fines and penalties arising out of regulatory actions. But if you go back to the sort of the back end of these policies, you'll see an exclusion which says, well, those things are only insurable to the extent they are insurable at law. And actually, that's quite a complicated position in most jurisdictions because fines and penalties for regulatory breaches are treated almost like a criminal issue, and that's not insurable. So actually, you might not be able to get a lot of fines or penalties insured, or they might cover costs and expenses to investigate. But also you need to think about, like I said before, if there's been disclosure of claims and the insurer's asking questions about risk management and it's quite hard to pass on the information, or there's some systemic risk, etc., you might find the insurers then start to carve away even more coverage. So that's sort of led Andrew and I over the past few months to have some general discussions and reflections on where the insurance industry and open source community need to collaborate to help make these insurance products a bit more tailored and fit for purpose. And I think just from my perspective, what I suspected, and as definitely seems true to me, is the landscape for products which might be relevant to an open source software business or software business generally is pretty complex and very fragmented, and trying to piece together all the different products in a way that works is not an easy task based on what's on the market. One of the challenges, as we've already alluded to, is we think that many insurers don't have a deep understanding of software development and open source risks. So obviously, if you're trying to get them to tailor something that works for what you need, that's going to be a challenge. And what that really means is that off-the-shelf products without tailoring probably don't or probably don't work that well for many software businesses, especially with some sophistication. So that probably means that in each case, all those insurance contracts probably need to be heavily negotiated and tailored on a case-by-case basis. So having that discussion with your insurance broker and how that's going to work early on is probably going to be quite key in the short term. And actually to achieve comprehensive protection, it's probably going to mean blending together multiple different types of policies. We've mentioned some of them earlier. And one thing that we're going to touch on in a second is we think insurer requirements are going to change quite dramatically in the next few years because of new regulations, which Andrew's going to touch on. But Andrew, keen to just get your hot take on this whole process so far, and if you've got any other thoughts.
Yeah, I mean, I think I agree with everything that you said, and I think the key thing here really is to take all these different strands together and try to come up with a product that is easy both for the insurers to understand and for the customers to understand as well. And there's going to be quite a lot of product development that's required to do that, especially because of this sort of changing legislative landscape. So, I mean, the sort of two major pieces of legislation which are going to impact on this are the CRA and the AI Act. And if we sort of pop over to the next slide, I'm conscious we're running a bit short of time here. But I will go into a little bit of detail on what I think is going to happen here. It is going to require a lot of cooperation between the insurance industry and the open source community to really just increase the level of mutual understanding, and, as I say, to be able to produce products that really fulfill the needs of both the insurers from an ease of being able to underwrite risks perspective, but also clearly from what the customers need as well.
And Andrew, I think my sense from our initial conversations where we first started working together in the M&A context was that due diligence is king. And I think that's going to be where insurers are going to be looking to the community as to how they're going to due diligence those risks in a way that they can information can be passed to insurers to assess, and that's probably one of the gaps at the minute, which we've been talking about quite a lot, isn't it?
Yeah, exactly. So we sort of talked about the CRA and the AI Act, and there's also the Product Liability Act as well. And essentially, what all of those do is you'll already be familiar with the CE marking regime. If you take, for example, sort of just about any electronic device and have a look on the bottom of it, there'll be a label that's got a CE mark on there. And what this does is extend this CE marking regime to cover not only the physical parts of the product, but also the software and any AI parts of the product as well. This legislation was placed on the books last year, and depending on the piece of legislation, it's being phased in to full effect over the next couple of years or so. And in particular, as far as the CRA is concerned. So what that does is it means that any piece of software that really has any sort of connectivity to the internet at all, so essentially any piece of software, it has to be to go through a due diligence process to ensure that anyone who is shipping it is aware of and manages the risk of any sort of issues with cybersecurity and vulnerabilities and so on. And clearly, if you have a product that's got, say, 100,000 components in, it's going to be, potentially a very complex process to enable to do that. We don't know exactly what that's going to look like yet, because there's a set of standards that are currently in development, and we should start to get some indication of what they contain fairly shortly, and also a set of guidelines which is being produced by the European Commission as well. But what this is going to mean is that the supply chain is going to have to contain quite a lot of information about the vulnerabilities, and this will have to be passed between different levels of the supply chain. And we're working out mechanisms for doing that in the most friction-free possible way. We don't want everyone in the supply chain to have to vet individually each individual component. But because there's liability for failing to do this properly, therefore there's got to be reliable ways of passing that information along the supply chain. And there's been a lot of really quality lobbying going on by organizations like the Linux Foundation, Open Forum, Europe, Eclipse Foundation, and so on. So the European Commission, is aware of the issues that the open source community has, and certainly as far as CRA is concerned, they've introduced this concept of an open source steward, which has certain obligations, but they are not subject to financial penalties for failing to meet those obligations. But we're going to see some rejigging of the supply chain to enable this sort of due diligence information to be passed from one level, one actor within the supply chain to another. But that, of course, means that then there's going to be contractual relationships, there's going to be warranties, indemnities, there's going to be risks, and insurance is going to be part of the toolkit which is required to deal with those particular risks. So can we pop on to the next slide? So I think we potentially have a virtuous circle here. And broadly speaking, the industry is behind these initiatives because, as we said right at the outset, one of the mechanisms for managing risk is rather than passing it on to either the other contracting party or to insurance is actually to deal with the risk at source and to make sure that you've got appropriate practices and procedures in place in order to manage that. And again, this is why the OpenChain project exists. And clearly, customers are always going to be happier if their supplier is managing the risk rather than feeling that they have some sort of comfort that if it all goes horribly wrong, that it's backed by insurance. So the primary solution is, just don't allow this problem to arise in the first place. And as more and better information is available, then it means that the insurance products will get better and they'll get more appropriately priced. And this really is where OpenChain, can play a very significant role, and indeed is doing so already in helping to transfer this information. More information in the marketplace is a better thing. It means that the market is going to operate more effectively. So the industry as a whole wants to reduce the risk through initiatives like OpenChain. And the more that the risk is actively managed, the better. So, at the moment, you can regard the OpenChain specification, ISO 5230, as being sort of binary in terms of either you're compliant or you're not compliant. And that is really useful information. But as you know, we've been also working on a capability model that means that you can have sort of more fine-grained analysis of an organization's capabilities. And I think this is going to be a very important part of the toolkit for insurers to enable them to understand and price the risk more effectively, and crucially for the industry as a whole to generate a roadmap that means that organizations can manage their risk on a proactive basis and can improve their risk management and therefore lower their risk profile as well. So that's pretty sort of rapid galloping through that slide, I'm afraid.
But I think that's a really important point, because the insurance industry will always look to a standardized and objective framework to assess any kind of risk, no matter what it is. So the more that something like capability model that's generally applied and agreed it is used, the easier it is for insurers to offer products that will do what's required. And I think that's potentially going to be an important factor moving forward. I guess we should just very quickly rattle through this, conscious we're over time, but we've already said that the active risk management is important and will be increasingly important as part of dealing with risk, but also demonstrating to insurers that they can provide products to companies and it's a safe bet, in inverted commas. Designing bespoke, or should we say tailored, insurance solutions for the open source industry. It's not going to be straightforward, and it's going to require a very collaborative effort, not just within an insurance company, so the different divisions, but also between insurers and the open source community, because as we've hopefully established earlier, there's so many different types of products out there, but they're not really designed for probably what you need. So there's a need to now create a potentially bespoke set of new products. And there's a commercial opportunity there for people in the insurance industry, but also in the open source community to help make that happen. And one of those things is going to be developing of those risk management tools and frameworks, which can be easily translatable to other industries like insurance, and that's going to be really important. We think the regulatory pressure, so the Cyber Resilience Act and the AI Act, was going to drive this process pretty rapidly now. It's usually legislation which drives the need for insurance, and this is going to be no exception. So we think this is a pretty unique moment in time for the open source community to help define what this next generation of insurance products look like. And that's really the whole kind of reason for this presentation, was to help sort of set a foundation for that discussion and hopefully drive it forward. So we don't have the answers today. As you probably realize, we have more questions than answers. But that's an important starting point, is to know what the market looks like and where the gaps are and what we think we need to do to address them. So I think that's all from me. And have you got any other closing comments, Andrew?
No, I think you've summarised that extremely well, Lewis. So thank you very much indeed. I don't know if we've got time for questions. We've got a sort of few coming through.
We do.
Sorry to run over.
So let's take it in reverse order. We've got one from Stephen, which is, what do you suggest is the best way for the open source community to help define the future? What kind of routes and mechanisms are there to engage with this? Stephen, would it be correct to say you're asking, how do we help describe the potential risks? Is that
Yeah,
correct?
very much so. Yeah, yeah. There's some really great ideas here and future opportunities. So what do you suggest is a way for us to engage, and who and how, to engage?
So I guess we've Andrew and I've started that process, and there's potentially others that have as well, and that's uh, going back to what I said earlier about it being a bit of an analog process of Andrew and I walking around the Lloyd's of London market and chatting to underwriters. That is really one of the starting points for this, and that's trying to bridge or build connections between the insurance industry and open source community. So, Shane and Andrew very kindly enabled me to come along to the open source compliance summits, and that's a great start, because I can then use that information and that's being gathered to start to shape discussions with the rest of the insurance industry. But that needs to be scaled up. It can't just be obviously just me and Andrew. We need the wider kind of buy-in, and obviously insurance is a profit making business. So the more that the open source community can demonstrate there's a need for fit for purpose products, the more likely the insurance industry will turn its mind to a commercial opportunity that they need to address. So I think continuing this dialogue and maybe expanding it in a different way, with a broader set of people, that's probably the next step, to pique interest within the market and get deeper engagement.
Yeah, I would agree with that completely, and I think it's going to be an iterative process as well. We're not going to be able to work on producing, the perfect open source insurance product. It is that there is going to be quite a lot of back and forth, and I very much encourage that in terms of the communities talking to each other, and that will, hopefully lead to the introduction of products which are improved and refined over time.
Now, there's another question. It's Yari. He's asking which insurers are active in this area.
Well, so when we say which area, that comes back to that complicated question of which products. So there are so many different permutations of products that might be applicable, that there's almost an endless list of potential insurers that could have products which are relevant. That's not a very useful answer, but that is the truth, and it's about how do you curate those and reduce that number down to those that kind of get their heads around the risk and actually provide a sensible product solution. So if you kind of go back to the kind of key point, there is usually a human underwriter sat on the other end of the desk reviewing information and making a decision. So finding that right decision maker is really crucial, and it doesn't really matter what insurance company they're based at. To some extent, it's trying to find that right underwriter. That's probably a separate discussion we can have, Yari, on all the different kind of insurers in each bucket. There's far too many to kind of list off on this call. Yeah.
That's great. No, that makes a lot of sense. I think that covers the outstanding questions, with one note from Fukuchi-san over at Sony, just saying it's a very informative webinar and he gained many insights. He noted that while many people say open source is free, there are various costs with using open source, and it's good to be able to get an idea of those costs in areas like insurance. So he found great value in your presentation.
Excellent. Thank you, Fukuchi-san.
Right. Well, I guess there we shall wrap it up with a note for now. Because if you went around Lloyd's and you found a lot of people which had something to say about this matter, but we don't have a clear meeting between the minds of the mass market of insurance brokers and what we understand as reality and open source, it seems like there's a lot of chance for this dialogue to continue and for things to shape up. So we'll no doubt be asking you back sooner rather than later.
Thanks for
Thank you,
having us,
Shane. Well,
Shane.
thank you very much indeed for asking us along. It's been great. And thank you so much for the questions. Great questions. Thank you, everyone.
Take care. Have a beautiful day.
Bye. Bye-bye.
Thank you.
Bye-bye.
Bye-bye now.